Hello, I'm Robert and welcome to my channel where I talk about everything automated algorithmic trading or simply algo trading. Today I am introducing something experimental for feedback and improvement, and the links will be in the description below. I am introducing a correlation table and a heat map to help determine assets that are in full correlation or have an inverse correlation. Now, a correlation is critical when you're using an accumulation style trading methodology where you may not be using a stop loss, because depending upon how you set your trading up, this will give you a natural hedging, even when you have a jurisdiction or a broker that doesn't normally allow hedging the same asset. Correlations are critical towards protecting yourself in the market. And that is what I'm going to demonstrate today with these two tables. Let's start out with the Forex. And I should warn you ahead of time that if you have Chrome on a mobile device, there is a good chance it may not be capable of loading all of the data. Even for this video, I had to scale down the data quite a bit. But Safari does load it just fine without any problems. So we have the text on the screen that describes with examples what a correlation and inverse correlation process is. So let's just get right into the charts. This first chart normalizes the rate of change with the assets listed. Now this is critical and important when you're looking for a correlation, because you want one asset to trend the opposite of the other if you want an inverse correlation or a hedge with a directional position. Particularly if you have a broker where you can only take long positions. And the second chart is an actual heat map, where one is the most correlated. That means that the asset moves in the same direction at the same time. So if the price goes up on one asset, then the second asset, it will also go up. And we will demonstrate that. But first, let's look at this table. -1 means they are completely opposite. 1 means they are completely trending in the same direction. And a 0 means they are completely no relationship at all. So let's start with a -1, an inverse correlation. So we see here that if you were to trade the Euro GBP, and the GBP Canadian dollar, they trend opposite of each other. So let's see that in the chart above. So what we are going to do is go to Euro GBP and double click. That now isolates that one asset. Now what was the second one? GBP Canadian dollar. Okay, let's go here and only single click. And now we see that they are indeed inversely correlated. When one goes up in price, the other one goes down in price. So for my style of trading, I short both of these, and I will make profits while the other side is making accumulations. So by doing both in one account, I have a natural hedge that helps me protect my portfolio. Now this is an inverse correlation. This works for me very well because I can also long both with my legal jurisdiction and still take advantage of this kind of a hedge. But now let's look at one that is perfectly or near perfectly correlated. And that would be the pound versus Canadian dollar and the pound versus the Singapore dollar. So we already have the pound Canadian. So let's turn that off. And let's go to the pound Singapore. And you can see here on this chart that the price of both of these pairs pretty much moves in the same direction of each other. So by using correlation and inverse correlation appropriate to your trading process, you are able to narrow down and limit your risks. Now this does work well with a stop loss system also. So depending upon your approach and your own risk assessment, choosing an inverse correlation or a standard correlation will give you a natural hedge depending upon what your limitations are. For example, in this case, if your broker will let you long and short, then you can long one side, short the other side. And you will capture the market moving in both directions with the same account, so that they will balance each other out. And then when you factor in your margin and your leverage, you have a natural way to limit your risks. Now this data for Forex goes back approximately 15 years. And this is pulling from the OANDA servers. So the full version, once it's fully released, will have every pair OANDA supports that I can pull from the server. So for this chart, let me know what you think. How useful would this be? And I know I need to do something with this wall of text. And I'll probably put this on a separate page. But for now, it's good enough for the experiment and for the demonstration of the data. So let me know what you think of this particular chart for Forex markets and whether or not you think it will be beneficial in helping you trade. Like the Forex chart, I have a sample for the crypto charts, using Bybit as my sample. And I also had to limit the number of pairs for this video just to keep my browser functioning. Again, when you're working with this, be aware that an exchange like KuCoin could have 1,300 different pairs listed. So this table can be quite lengthy and very elaborate. So let's get back into the chart, and you'll see the normalized rate of change for my sample cryptocurrencies that I have on the right hand side. And you'll see that my heat map is a little more involved. Again, the same thing. A 1 is a pure correlation. A -1 is a pure inverse correlation. And a 0 is no correlation. So let's see what we can find. Okay, Algo, BTC, and BTC USDC are inversely correlated by 69%. So let's see what that looks like. So let's come here, double click on Algo BTC, and left click or single click on BTC USD. And indeed, we see that right now they are very much inversely correlated. However, we can see that at this point they were very correlated with each other. So by inspecting the chart, you can see whether or not a particular pair might actually become correlated or inversely correlated over its history. And of course, that history is on the basis of what the exchange will provide you. So here we have an interesting combination where this particular pair set does in fact show both a correlation and an inverse correlation. Now I demonstrated what a full correlation looked like on the Forex. Let's see what no correlation looks like. I'm going to ignore the contracts with the zeros or with the numbers. Okay, Sand and Mana, both BTC. Let's see how they correlate. So we double click, that resets the chart. Now we've isolated Mana. Now let's left click on Sand. Now these actually show some correlation, even though the number says that they're not correlated at all. So that's an interesting result that you can get when you're looking. And sometimes you'll get situations like this where there's just enough difference that the algorithm doesn't see the correlation, but you can visibly see that these two move pretty close together. And that's critical when you're trading. So let's see what Mana looks like. Matic also somewhat correlated. So that's interesting. And you could actually do this back and forth with different assets to see how well they work out. And the nice thing about the way this chart is designed is you're not limited to just one market, depending upon your exchange. For example, we can look at this particular asset and we see it's a mixture where now it's inversely correlated, but at one time between January and February of 2023 prior, it was very correlated. So again, some very interesting results for this kind of a system. So by using these two tables, you can help find and improve your trading such that you're able to hedge against the market just by looking at the pairs themselves. Let's see how this trades. BTC USD trades the opposite direction of XRP BTC roughly 76% of the time. But BTC USD and wrapped BTC USD they trade in the same direction roughly 99% of the time. So two different, quote, currencies being compared. And you can see that above as well in the table. So that's really it. Take a look at these charts. Tell me what you think. What can be improved? Does it explain everything thoroughly enough? Tell me how you could use this in your trading. Will this help you pick better combinations? Will this help you isolate and control your risk better? Let me know. If you like this video, please give it a thumbs up. If you're not subscribed, please subscribe to the channel. And thank you for watching. Until next time.